Rising prices, stock market crashes, more and more inflation are just some of the many things that you might have been noticing in the market for the past few months. And maybe like most of us, you might be sitting in your chair and thinking, hey, that happens time to time. It is obviously going to get better, right? Well, we don't know exactly what to tell you, but because we do not want to give you false hopes, we also do not want to scare you as well. So what we are going to do is turn to a man who knows about all this far better than anyone else.
So everybody thinks there's going to be inflation, but the velocity of money is plummeting. People are not spending. So they pump all this money in, prices go up.
If there is a book that needs no introduction, it is Rich Dad, Poor Dad. And Robert Kiyosaki, the man behind it, is one of those people you need to take very seriously, especially when it comes to financial markets. Let us not even go back to the 2000s and stick to his very recent predictions. This year in March, he had predicted that the US dollar was about to implode, and thankfully, he also did give us a way out of it, which was the advice to buy more Bitcoin, Ethereum, and Solana. Then again in April, he told us about an upcoming hyperinflation and depression and repeatedly stressed on the fact that we are in the biggest bubble in the world history. As we can safely say, it is all happening exactly as he did say. Well, the concerning point here is the very recent tweet from the US author, which said that US bond markets are going to crash, and it is going to be the biggest bond crash since 1788. So is Kiyosaki just being paranoid, or is this something that investors should really be worrying about? Let us look at all the facts we have got. Just right now, we talked about something called a bubble. Now you may ask, what is a bubble? To understand that, we need to first understand clearly the markets that we are talking about here, the bond markets and the stock markets. Stock markets is something that we are all aware of, so what exactly is the bond market? Well, investors view government bonds as safe havens during a period of economic stress. In Kiyosaki's words, the bond market is nearly 40 times bigger than the stock market. Governments usually issue bonds in order to raise the capital to pay down the debts or just to pile up on infrastructural funds, which are the funds that go into improving the infrastructure. So now you might be thinking, how does all of this add up to what Kiyosaki said? For that, we need to go back to the basics. As you might already know, any transaction in the market requires both a buyer and a seller. The only difference in any transaction around the world is the price at which it happens. This price is what makes all the difference. The crash that Kiyosaki is talking about will be due to what we call mean reversions. This is an idea that in spite of any sudden jumps in a stock or a bond, the price will come back to the standard level. That is how investors in any market like to think, even you and I. Whenever a stock goes very low or very high, we usually sit and like to expect that it will come back to the way it was, right? As an investor, you might also be aware of the fact that adding any strategy to a portfolio to mitigate or diversify a certain risk creates an underperformance relative to an all-equity benchmark index. Now let us put all of what we said till now together. If you look at a graph that shows the inflation-adjusted S&P 500 index, you will see it has been deviating widely from the exponential growth trend. And if you compare those peaks with, say, the 1974 crash or the dot-com crash, you will realize that this peak is much, much higher compared to those. We are now in a zone which in financial terms is called everything bubble. Do you remember us talking about a bubble just a minute ago? What does that mean exactly? Basically, there has always been some new thing that has caused interest in the market, something that investors have believed in and invested in. Over the last 500 years, these speculative bubbles have involved everything from tulip bulbs to railways, real estate to technology, emerging markets to automobiles, commodities, and Bitcoin. During each inflation phase, each period got rationalized as this time is different. Every financial bubble during those crash periods had a few things in common. 1. A huge amount of interest towards them from investors. 2. A sincere belief that this bubble was going to be different from others. And 3. The one that we and Kiyosaki are dreading, a tragic ending that brought down financial fortunes. In short, whenever there is huge financial bubble, a crash becomes quite unavoidable. So for now, there are 2 things that we are aware of. 1. Robert Kiyosaki is correct about the next crash. All the statistics we have and all the recent market performances show that his words are true. And 2, we have no idea when this crash will happen. It could come at any time, next month, next year, or even after a decade. Apart from the mean reversion, crashes happen due to another reason as well, which is a change in the investor psychology from the fear of missing out to the fear of being in. When such a selling begins, buyers will vanish and the prices will fall lower. What could cause such a change in the psychology? Historically speaking, the issues have been a sudden surge in inflation, currency crises, and some important economic events. With the pandemic and the constant geopolitical troubles around us ever since the last year, we have unfortunately ticked all of the boxes this time. All of these factors point to only one expected result, that Robert Kiyosaki's prediction will be coming true. The good news? Kiyosaki has also provided some tips on how he is preparing for this seemingly inevitable downturn. And so have we, but for that, you do need to stick to the end of this video. Kiyosaki has said several times over the past few months that he is waiting for Bitcoin to bottom out just so he could buy some more. He also revealed that he is in cash position, waiting to pick up bargains as the asset prices are crashing. Tragically, rookie investors follow rookie advice of 60-40 mix. He tweeted and recommended investors buy gold, silver, and Bitcoin as insurance against morons running the world. Apart from doing what Kiyosaki suggested, it is also important to properly size your portfolio positions so as to mitigate the risk of any concentrated positions. And if you are not sure about what to do, the best thing is to do nothing. Rash decisions during a crash or right before a crash will only make your financial troubles worse. Since you already know that a crash is coming, it would be great if you decide to rebalance your portfolio allocations. The bottom line is that if you want to take a step, this is the time to take it, and also the time to make sure that you are not ignoring bonds outright. A climbing bond market is never good news for the economy, and the signs are already all around us. China's real estate market is crashing, and yet, as Kiyosaki noted in another series of tweets, that there are over 90 million empty condos in China. It is happening in the US as well. Real estate is crashing and foreclosures are up 700% from last year. At this point, as investors, all we need to remember is two things. One, to make sure that our investments exceed the rate of inflation, and two, that it meets the rate of return required to meet our long-term financial goals. So, if you were afraid of the next crash when we started this video, maybe you are now a much aware investor with an idea of what exactly to do, and more importantly, what not to do. If you loved the video, make sure to hit the like button, and do not forget to subscribe to our channel. Also, what do you think about Robert Kiyosaki's predictions? When do you think the crash is going to happen? Let us know in the comment section below, because we love hearing from you. We will be back very soon. Thank you so much for watching, and have a great day.